Hey there, it's Fran the Mortgage Man, your trusted mortgage expert with over 20 years of experience. Today, I've got an exciting topic for you. How to pay off your 30-year mortgage in just 15 years. That's right, half the time. Now, I know what you're thinking. How am I supposed to do that? Well, don't worry. I'm gonna break it all down for you in simple steps that anyone can follow. So let's dive in. So before we get into how, let's quickly talk about why. Why would you want to pay off your mortgage in 15 years instead of 30? There are actually a lot of good reasons. One, save on interest. The biggest benefit is interest savings. Over the life of a 30-year mortgage, you can end up paying tens of thousands of dollars in interest. By shortening the term, you'll pay off your mortgage quicker and keep that extra money in your pocket. You can build equity faster. With a 15-year mortgage, you'll build equity in your home at a much faster rate, which gives you more financial freedom. You'll have peace of mind. Imagine owning your home outright. No more monthly mortgage payments hanging over your head. That's a powerful feeling and gives you financial flexibility. Let's get to the good stuff. How do you actually make this happen? One of the most straightforward ways to pay off your 30-year mortgage in 15 years is to refinance to a 15-year mortgage. When you refinance, you're essentially taking a new loan with a shorter term. In this case, 15 years instead of 30. A 15-year mortgage typically comes with a lower interest rate than a 30-year mortgage, which can make a huge difference in how much interest you pay over time. Here's the thing, even though your monthly payment will likely be higher than it was with a 30-year mortgage, you'll still be saving a lot in interest. Over the long run, this is a smart way to pay off your home much quicker. But refinancing isn't the only option. So let's look at some other strategies. The next strategy is one you can use even if you're sticking with your current mortgage. This is making extra payments toward your principal. This is where the magic happens. Every time you make a payment, part of that money goes to the interest and part goes to the principal balance on your loan. By making extra payments toward your principal, you reduce the amount of interest you'll pay over the life of the loan and speed up the process of paying it off. You don't have to make a huge extra payment. Even small, consistent contributions can make a big difference over time. For example, if you're paying $1,500 a month on your 30-year mortgage, try adding $100 to $200 extra each month. This will go directly toward the principal, and over time, you'll see your balance drop much faster. Another great strategy is to switch to biweekly payments. Here's how that works. Instead of making one monthly payment, you make half of your regular payment every 2 weeks. And at the end of the year, you'll have made 26 payments instead of 12. That's an extra one full payment every year. This extra payment goes directly toward reducing your mortgage balance, which helps you pay it off faster. It's an easy strategy that doesn't require a lot of effort on your part, but it can make a huge impact in the long run. If you really want to pay off your mortgage in 15 years, it's time to take a closer look at your budget. Paying off your mortgage early often requires mindset shift. You might need to cut back on some non-essential expenses and focus on redirecting that money toward your mortgage. Start by looking at areas in your budget where you can make adjustments. Could you cut back on eating out or subscriptions like streaming services or magazines? Maybe it's time to rework your entertainment budget and find cheaper options for things like phone plans or insurance. Once you've identified areas to save, you can use that extra money to make larger payments on your mortgage. Another great way to pay off your mortgage faster is to use windfalls or unexpected cash. If you receive a tax refund, work bonus, or any other lump sum of money, consider using that to make a lump sum payment toward your mortgage. Even putting half of your bonus or tax refund toward your mortgage can have a big impact on how quickly you pay it off. Let's say you receive a $5,000 tax refund. Applying that to your mortgage will directly reduce your balance and could save you years of payments. The key is to be disciplined and put this extra cash directly toward the mortgage instead of spending it on non-essential items. If you want to speed up the process, you might also want to consider increasing your income. This can mean taking a side job, selling items you no longer need, or finding ways to monetize a skill or a hobby. Extra income gives you more flexibility in making larger payments toward your mortgage. It can also be a great way to pay off your mortgage faster without having to sacrifice other parts of your lifestyle. If you're really committed to paying off your mortgage early, increasing your income is a strategy that can make a huge difference. So to recap, here's how you can pay off your 30-year mortgage in 15 years. 1. Refinance to a 15-year mortgage. 2. Make extra payments toward the principal. 3. Switch to biweekly payments. 4. Reevaluate your budget and cut back on unnecessary expenses. 5. Use windfalls, bonuses, or tax refunds to pay down your mortgage. And 6. Increase your income through side jobs and other opportunities. By following these strategies, you can own your home outright in half the time and save yourself thousands of dollars in interest. If you need help with refinancing or creating a plan to pay off your mortgage early, don't hesitate to reach out. I'm Brand the Mortgage Man, and I'm here to help you make smart financial decisions. If you found this video helpful, make sure to like, comment, and subscribe for more tips on mortgages and home ownership. Thanks for watching, and I'll see you in the next video.